We're just a little over an hour till the opening bell on Wall Street. Joining us right now is Emily Roland from Hancock Investment Management. We've got literally 2 minutes to talk here, Emily. Given all the numbers we've been looking at, futures pointing to a higher open right now in a nice way, but there's still so many questions. What are you doing?
Yeah, a mixed picture this morning across the economic data, seeing the miss on retail sales. I think there was probably a YOLO element to consumer spending to end 2023, and we're starting to see credit conditions deteriorate a bit. But again, some of those regional Fed surveys coming in a bit hotter than expectations. So we're seeing this mixed picture where we're having this Fed tightening really not creates meaningful cracks in the economy yet or the labor market. And one of the reasons for that is that we're continuing to spend. So, in this environment, you want to stay invested. Typically, the Fed raises interest rates until something breaks, and we're not seeing that. In fact, we're seeing momentum pervading across the markets. We're seeing riskier areas like crypto-related stocks, AI darlings, momentum taking hold in this market. So you want to stay invested. It's tough to fight that momentum, but we think you want to be thoughtful about where you're taking risk.
You're saying you want to be in this market. Is there a point at which you think you don't, though?
Well, I mean, we're certainly starting to see a lot of exuberance, but it's limited to some of those areas, again, that are, potentially unprofitable companies. We're seeing some high-flying names related to crypto markets. So we think you want to trim those areas and redeploy assets into higher quality parts of the market, ones with great balance sheets, great return on equity, lots of cash, a low interest burden. It looks to us like the Fed's going to have to remain on hold longer than many of us expected. And we think that's going to challenge companies that have high interest burdens and that need to tap the capital markets in order to grow. So those are some of the areas that we would avoid.
Emily, I want to thank you. Nice to see you, and appreciate you sharing your perspective as we're getting some of this data coming in right now. The Dow up about 71 points right now. The NASDAQ up about 20. The S&P 500 just up about 5. Let's also show you where the 10-year and the 2-year sit. Given what we've just been talking about here, 4.197 on the 10-year, the 2-year 4.519.